What's up, everybody? Today we are talking about stop losses. What are they? Should you use them? And what do I do? So a stop loss is a market order. It's stop loss, take profit. Same thing. When that price is hit where you set it, it triggers to sell to the next buyer, whatever cost. Uh, it's important to know that it is a market order. And with this argument, there's debate. You'll come across people that swear by them, and one way or the other, they'll never use them or they will use them. And like any extreme to any argument, I think there's flaws on both sides. Yes, I use them. Every trade I enter has one. I definitely don't do it. I don't enter a trade without a full bracket. So I have a stop loss and a take profit. But if I am managing them live, I don't have them because of manipulation. I've seen it do a lot of bad things. You do tag out, so it's risky. But they are a safety net. They are to make sure they're to keep your losses minimal. So yes, if you are not literally just watching right then and there, yes, you should have a stop loss set. But where most people fail is they hear about this 1% stop loss and then they set it they buy in, they put their whole account on one trade, 1% stop loss, and it tags out every time because that's nothing. It's right underneath it. You tag out. You didn't just tag out a loss, you tagged out a meaningless loss that didn't have to happen. Just for putting it too slow, which goes more into position sizing. I'll do a whole video about position sizing around that, so you can have a 1% stop loss. It is something I tell people to do. Me personally, one of my old teachers did this, and it stuck with me. I set a price alert at 1%, and I do a hard stop at 3%. But everything I do is based off price action, so I'm safe regardless. Because if you look right here, I brought this up purposely just for this. This was a monster day. And by that, I mean in the chat room I'm in, people were locking in losses left and right. This thing just shot out of nowhere. Up, down, up, down, up, down. This is a 15-minute candle, but look at that. The price actually went from here to here in 15 minutes. But inside that, it was more like 2. It came all the way up here to all the way down here multiple times. I had notifications set. Actually, I had to take profit, and that was how I was notified because it went up first. It tagged my take profit. Now, this is where I say it's important to know it's a market order because my take profit was at $100. It tags it, and then it sells to the next buyer, which was $30 profit. So, fortunately for me, I didn't make as much. Other people, when moves like this happen, they tag out, but by the time it sells, it is way below. It's way down here. In this time, this 15 minutes is weird because I'm watching it live, and we were crossing over the minute making a new candle here. So this was actually one giant just back and forth from here to here, and it was tagging people out, and then it'd come all the way down here, and that's when the order would sell. They were losing money left and right. This was like an earthquake that hit the market, which just goes to show you these markets are manipulated, which is why if I'm managing them live, I don't have one, just for that very reason. This one, I wasn't. If I'm not managing it live, like I said, I have the safety nets there, my take profit, my stop loss, and they were hit. Just luckily for me, it went up first and hit the take profit first. So like I said, I just didn't make as much as I would have. But why I don't always run them? Because look what happened. I mean, if you forget this giant wick is even there, look what the market did. It just kind of stayed in its own little channel. And then, so wherever you were going, if you were going long here or short, you had both plays later. It just, when they get crazy like that, that's what gives them a bad name, is people tag out, they lose money, and then they hate them, they never do it again, and then it won't be manipulation. News will break, something will happen, that price will shoot not in the direction you want, and there you are just locking in a loss, or you have your money tied up until it eventually turns around. You want to hold it forever. The Forex market is a sideways market, so you might have your money tied up in a while. but if it stocks, that it might not come back. You might be there for a while. Like I said, just might not come back. If it shoots down, the biggest losers are popular stock people like to buy because they think it's going to reverse and come back up. And that's not always the case. But manipulation usually is, but it's quick. It is, if you look right here, it's like it didn't even happen if you just watch the candles. So I am uploading this video on my stock channel and Forex, but a chart's a chart, a candle's a candle. They all read the same. The same manipulation is in both markets. So yes, have a stop loss. If you're not there, that's what it's for. It's a safety net. Keep your losses small. But if you are managing it, I'm not harping on anybody for not having one. But when I'm managing it live, I fingers on the trigger. I'm ready to sell if something crazy happens. But I'm not that. I don't act that fast because that's a lot of impulse stuff. But that's the risk. That's the name of the game. You win some, you lose some. You are successful in this when your profits are bigger than your losses, because you can have multiple losses with one profit that breaks you even. So to find one live, I guess, to see if I was going to put it in here. Let's see. I want to do this because I see a lot of traders do this, and it's death by 1,000 cuts. They get in a trade, they put their... Okay, just if we were to go right here. I mean, this is not the best example. Here it is. You got in here. It's in an uptrend, and you're going up. This one candle right here could have been your whole 1%. You had your whole account on here. You thought it's good, and then it pulls back to here, tags you out. You locked in a meaningless loss that didn't have to happen, and then look what you missed out on. It came all the way back up here. I don't ever trade this. Hang on. Let me find a better one for you guys. So a little bit better here. Same thing. Let's say you're playing the trade. The EMAs cross the SMA, whatever you have. You played this cross. You got in here. Look at this wick. If you got in here at this cross, it came down plenty of times. It pulled green. If you put your whole account on there, 1% is nothing. That's easily hit when you have your whole account if your position sizing is not right. So you would have tagged out on one of these and then missed out on the rest of this trend down. So that's why it's important, if you're going to put one on there, give it room to breathe. But also, don't just go wild about it. Don't just not have one, because that's a quick way to just lose, because it will go against you. Not every trade is a winner. You need to make sure if it's going against you, you have that safety net there. That's the most important part of this. The people, if they don't have them, don't argue with them, but they haven't had a big loss yet, or they will have one. That's the quickest way to learn a lesson, is to lose a bunch of money. The manipulation really makes people not play stop losses, because banks do it. It's called a stop hunt. They will purposely move the market in a certain direction just to tag everyone out, because then it shoots up even further. That bank gets in a great rate, and like you saw in the next 5 minutes, the price returned back to normal. The bank got a great entry. You just locked in some losses. You gave them a great deal. So pay attention. If you're going to do it, set a stop loss. Have a plan. Every one of my trades, I go in, it's based off price action. So if we were to find one, I'm trying to think. Man, I want to make this quick for you guys. Not even sure why I had this zone picked out. But so let's say, here's an uptrend. It's going up. You get in. That would have tagged a 1% stop out. But at any time, I would have had a stop loss. If I would have gotten in at this zone, my stop loss would be just under it. Because I know that once it breaks that zone, it's not an uptrend anymore. It's broken. So that's where my stop loss would be at. And then this giant wick down wouldn't have stopped me out. My stop loss would have been just fine right here. I got in at this zone, where that blue rectangle's at. That's where my stop loss would have been. So I would have just rode it up. This wouldn't have affected me. And it would just kept going. and then eventually I would have taken profit, depending on where. So yeah, I would have matched my profit right around there, right around those zones where I know it's going to be in trouble. So that whole trade, I might have even taken that trade. That's why that blue rectangle is there. I would have gotten in there. I would have had a stop loss. With an uptrend, it's the easiest play to make because once it breaks that, then it's, once it makes a new low, then it's broken. The trade's done. So I would have gone from there to all the way to the highs. Anyone else who ran a tight stop loss would have been tagged out. This particular trade would have been good because we were in an uptrend, but that one would have tagged them out and they would have missed out on all the rest. So it's important to not just have a stop loss. Don't just toss it out there, not throwing darts at a board, but have a plan or just plan to fail. You're going to lose money. Here's another one. This is what gives stop losses a bad name. These giant wicks. Look at how many people would have just stopped out. If you were shorting this because you were playing this, that would have been great. Your take profit would have triggered. But it's just manipulation. This whole wick right here. That in 30 minutes, the price came all the way down here, came all the way back like it never even happened, and it continued its channel down. So that's the argument behind why people never do it. But who's to say this? You're playing roulette right here. It shot down right here. Who's to say it doesn't just stay that way and continue down? I can't preach it enough. Have a plan, guys. Just don't go in it blind and don't just guess your numbers. That's the most important part. Base everything off price action and then base your position size off that. Don't throw a 1% out there. Find your entry, find your stop loss, make that 1% of your account, and that's what you'll buy in with. That's how you make a 1% stop loss. Don't just hop in a trade just because it looks like it's going somewhere and put a 1% stop loss on there. You'll lose every time. Hey everybody, thanks again for watching the video. Please show your support. Hit that thumbs up button for me. Comment down below. Subscribe. Hit that little bell button if you want to be the first ones to view the next video. If you want to see any more, check out my website. The link will be in the description. If you'd like to reach out to me personally, my email is also in the description. Reach out to me. I'll get back to you as soon as I can and help you out with any questions you have. Again, let's lock in profits, not losses.